Hello everyone, how are you today? It's Kay. So I hope you're having a great day today. This is the 27th of January and this is on Thursday. So let's get started and check some charts with Ichimoku and see what's happening in the markets right now. So yeah, let's see. So I have been reading the original book today. I was reading the original book for the last 2 hours or so and studying myself. Every time I read the books, I study something new. I learn something new. So it's a very deep book. So today, as the title says, today I will first check the Euro USD because it just broke the support level. So I thought it's an interesting market to watch. And also the other trending pair, which is Pound USD, I will mention that also in today's live stream. I will also mention about the Ichimoku 5 lines and also time cycles on these two pairs. So hopefully you stick to the topic and learn something new until the end of the live today. So let me switch the screen and start that session now. Okay, so just before starting here, as a quick disclaimer, as always, this content is basically based on my own experience knowledge. So when you take trades, please do at your own risk. And since this is live stream, if you can please follow the rules and guidelines, that would be great. Okay, so let me see who's here first. All right, and once again, good to see you, everyone. Thank you for joining. Okay, good to see you, everyone. Par, good to see you too. And Minoru Endo, good to see you also. Yeah, Euro USD looks good today. So I will check that and give my analysis on that pair. All right, Thailand, good to see you from New Zealand. Thank you for joining. Great to see you here. All right, and Sarosh, Carbon, good to see you also. Thank you for joining. And Hazik Noor, thank you for joining my Ichimoku community. So please make sure to come to this website. This is my website, and hover over on services, Ichimoku community, and click how to join. And in this web page, if you click here, then scroll down a little bit, then you can find a link to join the Discord here, join Ichimoku Discord. So please click on this link and join Discord group and get all the perks. Unless you join Discord, you cannot see all the perks after clicking the join button. So please make sure to click this one and get all the perks. But once again, Hazik Noor, thank you for joining my Ichimoku community and stay gold. So I have now recovered from COVID. It was a long journey, 2 weeks. It took me 2 weeks to recover. So I would say I recovered at 90% because I still have a big cough and sometimes a slight fever. As I talk like this right now, I'm about to cough. So whenever I want to cough, I will mute and drink water and keep on doing the live stream until the end of today. So hopefully you enjoy this live stream. Okay, so let's see who else is here. Vipin and Melanie, good to see you. Thank you for joining. And Johnny K, Eugene, Blackwater, Asif. Thank you for joining, everyone. Good to see you. Kundesh and Basam. And Per again, thank you for joining. Let me quickly say hi to everyone because I want to appreciate your participation here on the chat. Rex and Flo, good to see you too. Good morning, good afternoon, good evening, depending on where you are. All right, Cecile, good to see you too. Oh, Blackwater says I have a sell position on Pound USD. I think that's a good decision. Right now it's going down. So yeah, there's no reason to exit yet. I will look into that pair deeply for now. All right, Kevin, good to see you too. And Vixen, Bedsheet, good to see you. And James also, good to see you too. Thank you for joining. Yeah, hold on, let me mute. So as I talk, I still feel like I cough. So yeah, let me speak a bit slowly. But James says, missed couple of opportunities today, never mind until the next one. Sure, that's right. So if in case you miss opportunity today, there will be always opportunity tomorrow or other day in the future. So the market is moving every day, and the opportunities are actually equal for everybody, including myself. So even if you miss chance today, there will be a chance tomorrow. And that's what it's all about. That's the truth about the markets. So I was actually feeling the missing chance for the last 2 weeks because I was under COVID and I wasn't able to trade. So for the first couple of days, I didn't feel anything, but maybe on the third or fourth day, as I wasn't able to check charts and take trades, I felt kind of like a missing opportunity. But after that, I realized myself that the market is moving every day anyways. So I was able to focus on healing the COVID first. And then once I get better, I can always come back to charts and take trades. So yeah, still myself, I sometimes have the feel of missing chance, but I think this is inevitable for everybody. So I think fear of missing chance happens to everybody, and that's I think the nature of as a human being. So that's something that we cannot really refuse. But I think the ignorance of fear of missing chance is something that is bad. So instead of trying to stay away from the fear of missing chance, you can face on these opportunities and believe that there will be opportunities every day. I think that's the basic truth about the markets. All right, let's see. Taro, good to see you. And Payson also, thank you for joining. Good to see you too. All right. Anaya and Jalash. All right, Kundesh and Gaming Design, Dragon. Good to see you too. All right, Pathy and Radical, Gautam. Good to see you too. Age Goke, good to see you too. And Sarosh. Yeah, EURUSD, I will look into it shortly. Yeah, because it's going down, broke the support. All right, Besam, good to see you too. And Andrew Lowe, thank you for joining as well. And Shabir and Tuan, good to see you. All right, so now let me turn to the trading view and start to see some charts. So today I posted one of my analysis on TradingView, and that was on EURUSD. I just mentioned that EURUSD just broke the daily support, and let's look into the EURUSD first. Let me just click on this one and share what I wrote on today's analysis. So EURUSD, on the comment I mentioned, I broke support level of 1.10 Tenkan-sen, Kijun-sen still in the daily time frame. So now let me turn to the trading view. So here is a full view of the EURUSD daily chart. And so the support level was here, 1.1186. It broke the support level and looks like it's going down, but it may retrace backwards. So yeah, hold on, let me see. So here you can see that the Kumo shape is very thin. So whenever you see the Kumo thin like this, this is showing the market is overshooting. So it may retrace backwards. So in that sense, this may not be a good timing to sell. We have to wait for the pullback, pushback and pullback, and then sell will be a right call, I think. So that's something we can read from the Kumo shape in the daily time frame. Okay, and let's see. Hello, Levinas, good to see you. Thank you for joining. So in terms of the other aspect of this Euro USD, if you can look at the forward chart, in the forward chart, this looks to be better than the daily time frame, daily Kumo. Let me split the window into two. So on the left, let me put the daily chart. On the right, I put the forward chart. And if you can compare with these two time frames, daily chart and the forward chart, obviously the forward chart Kumo looks better because it's thicker and this is longer after the twist of the Kumo. So forward chart Kumo looks better. So in this condition, you can follow the forward chart downtrend than the daily downtrend. So that means as long as forward chart shows bearish, we can follow. But once forward chart becomes flat ranging, we have to hold. And right now, we can see that the Senko span B is flat, Senko span A is going down. So Kumo itself shows long-term bearish trend. But if you look at the Kijun Sen, it's showing flat. Tenkan Sen is going down. And Chikou span below candles. So right now, there is a bullish candlestick in the forward chart. So it may retrace back to Tenkan Sen in this condition. So if you don't hold the position yet, this is not a good timing to sell, in my opinion, because still Senko span B and Kijun Sen are flat. So it may retrace backwards in this case. And also, daily chart also shows the very thin Kumo. Oh, and also one more thing is that the Kijun Sen is still within the Kumo in the daily time frame. So that also means that there is a potential retracement. So it may retrace back to the previous support level, 1.1186, and continuously go down this way. So if you are not really trading Euro USD yet, this is not a good timing. But if you already place a sell on the Euro USD, you can keep holding. You can set the break-even line and keep holding as long as it goes bearish. And also, one more thing to mention is that there was a news in the US. Currently, USD is bought right now. If you have checked the currency strength chart, here, let me turn to the strength chart and let me refresh. So as you see this chart, USD is the orange one, and USD is currently bought. So that means all the USD pairs are actually in a trending market, and also CAD is trending up also. So that means as per Euro USD, since USD is strong, Euro USD as a pair is bearish. And Euro is here too. Euro is a red one, and red Euro is bearish right now. So as a pair Euro USD, we can tell that it's also bearish from the strength chart. However, it's just retracing backwards in terms of these two time frames. So I would hold until the market retraces back to support level and continuously go down this way. This is obviously not a good timing to sell, in my opinion. And also, I would like to mention about the time cycle about Euro USD. So let me turn back to the one single screen, and this is the daily time frame. So let me mention the time cycles. So in terms of time cycles right now, as I have captured like this previously, so basically what I do is I take the swing highs and swing lows in the daily time frame and count the number of candles in between the highs and lows. So simply, if you just look at this number of candles, counting from the 3rd of September until the next swing high, which was marked on the 28th of October, it was 40 bars. Let me write it out here so that you can see this clearly. So in between the highs, it was 40. And also, and the next cycle was 57. Until the 14th of January, it was 57 time cycle. So in terms of the highs, 40, 57 are not really the same number. So from here, from the 14th of January, it could be one of the Kihon Suchi numbers. So from here, it could be 9 or 17 or 26 or other Kihon Suchi numbers. So that we have to monitor and see which Kihon Suchi the market will respect to the future as a swing high. But in terms of the swing low, counting back from the 20th of August until the 12th of October, it was 38. So it was 38 in between this low and over here. And then to the next swing low, it was 32. 32 up to the 24th of November. So counting from the 24th of November, right now, today is the 27th of January, and it has been 47 bars. So once again, this swing low could be one of the Kihon Suchi numbers. So it could be 51 as a next Kihon Suchi cycle. So I will extend this time cycle to the future, and 51st bar from the previous Henkabi, which was 24th of November, is going to be here on the 2nd of February. So in these time cycles, in my view, this downtrend can be persistent until the 2nd of February. So there might be some minor retracement because Kumo is very thin, and in the forward chart, Kumo is flat and Kijun-sen flat. But in the long term, I expect the market continuously be downtrending until the 2nd of February, because that will be the next Henkabi in these time cycles. So basically, this is how you can combine with Ichimoku 5-line analysis and time cycles. But of course, this is not 100%. It may retrace backwards, and the market might not going to respect exactly on the 2nd of February. So 1 or 2 days difference are acceptable for time cycles. So in that sense, it may be the 31st of January, or it may be 4th of February. But around 2nd of February, plus 1 or 2 days around this date, could be the next Henkabi. So that could be like, the market can go down this way until around the 7th of February and then retrace backwards. Is my view. But that will be very short term for these time cycles. But that's something that I can find in this cycle. So, oh yeah, and every time you count the time cycles, you better take the daily time frame. If you're new to Ichimoku, better to take the daily time frame or the weekly time frame to capture time cycles. Usually what I do is I take the daily time frame because it works the best for time cycles. So that is my overview for this Euro USD. So coming back to the forward chart right now, it's yeah, we can see that the Kumo is Senko span B flat, Kijun Sen flat. So it may be traced backwards. And this is also, if you look at the candlestick, this is inside bar. So to be safer, you want to wait for the breakout of the previous candle's low at 1.1134 level, and then look for the sell chance afterwards. Because the previous candlestick in the forward chart was very big in terms of the pips. On the previous 4 hour, it was 63 pips in range. So it was relatively bigger bearish candlestick than other candles. So this time, in this forming candlestick can be engulfing inside bar. And so when if it closes as an inside bar, then there will be a good chance that the market continue to be range as this engulfing candle. So in that sense also, this is not a good timing to sell. I mean, even if you sell right now, I don't think the market will move down quickly. So if you place sell right now, you have to keep monitoring the chart, which is not really time efficient to me. So I guess I will probably stay away from Euro USD for now and look at other pairs for opportunities. So yeah, so now let me come back to some comments here. All right, Levinas, good to see you. Thank you for joining. And Zebro says, when you backtest your strategy, how let's see, how lenient are you with the rules? Do you have exact conditions that must be met before you take the trade? I stick to the rules, first of all. So if the rules are not met, I mean, if I can't trade with the rules, then simply I stay away. So when I backtest, I do the same. Actually, when I backtest on the Forex Tester 5, I do the same. Yeah. All right. One slow says, I caught Euro USD on the opening of today's candle. That's good. That's good. So you took the sell. Today's 27th, so it was around here, at around like 1.1232 level. So if you already place a sell right now, then you better already set the break even, or you can trail. You can start to trail some profits, and you fix some profits already by now. If I would be holding the trade right now, this is in the 5-minute chart. If I were to place the sell in the beginning of today, which was around here, then my stop loss would be set over here at 1.1171 level. So if I place a sell already somewhere here, then my stop loss will be around here, and I will be fixing 64, 65 pips and continue to hold the sell. And once the market retraces backwards, simply I will exit with that pips. So basically what I do is I screen 3 times per day, and every time I come back to the chart. So let's say in this example, if I place a sell here, and until I set the break-even line, I monitor the chart. But after I set the break-even line, basically I leave chart. So in this particular example, if I place a sell, then my stop loss originally will be somewhere up there. Maybe I will take the wick high over here, and it may be, let's see, in this case around like 30 pips of stop loss I take. And after I confirm the market goes towards my direction, then I move the stop loss to break even. So what I mean by break even is I put the stop loss slightly below the entry so that I can cover your spread, because you're paying the spread. So if you place the stop loss exactly on the position, then you will technically lose some pips as the market retraces backwards. So make sure that you have maybe 2 or 3 pips below the position so that it can cover the spread, right? That will be the break even. And then after I set the break even, simply I leave chart. So let's say if I set the break even line here, when I see the market goes towards my direction, and then I leave chart for a couple of hours, maybe I will leave chart until the next lunchtime or maybe 2 or 3 hours later. So if I set the break even line here on this vertical line, which will be the 3:10 a.m. in UTC, then I will leave chart maybe 3 hours. So let's say that will be 3 hours in 5-minute chart will be how many candles? That will be 12 times 3, so that will be a 36. 36 bars I will leave chart, so that will be here. Somewhere around here, I will come back chart. The whole time I just leave chart. So here I come back to chart and I can confirm that the market is still going towards my direction. So this is when I move the stop to trail some profit. I will put the stop loss above the previous high in 5. So in this way I can fix the profit of, let's say, like 8 or 9 pips of profit. I fix it and I continue to leave charts. So after this, once again, I leave chart for maybe 2 hours, 3 hours. So next time when I come back, the chart will be again 36 bars to the future in 5-minute chart. And that will be somewhere here. So when I come back to chart next time on this day, that will be here. And then I confirm the market is still going towards my direction. So I will now drag this stop loss to the previous high in 5. I will take this doji candlestick in 5. So now I fix a profit of, let's say in this case, I fix the profit of 28 pips and keep holding. And the whole time, the higher time frame should be continuously downtrending. So basically, so once I confirm this downtrend, I will leave chart for another like 3 hours or so. So after this, after I trial the profit of 28, 29 pips fixed profit, then I leave chart again. So the next I will come back to chart around here. So 36 bars, 3 hours later, that will be around 11:50 UTC. So, or maybe 12, depending on which timing I come back. Around 2 to 3 hours, I will come back. So here, I come back to chart and I also confirm the market is still going towards my direction. So I will move the stop to the previous high in 5 or the beginning of this break, the beginning of this breakout. And this time I fix the profit of, let's see, that will be like 46 pips of profit. I fix this time and then leave chart again. And then I might come back to chart around, usually I come back to chart before the live stream starts. So that will be like 30 minutes ago. That will be around here. I confirm the market is going towards my direction. So I move the stop again to, in this case, I will move the stop to maybe here or here. In this case, since I can confirm the breakout in 5-minute chart over here, most likely I will move the stop to here at 1.1163, and that will be fixed profit of 72 pips right now, and still holding the sell position right now. So that will be, this is how I manage the stop loss as the market goes towards my direction. And this is the time efficient way to keep trading the profits in a day. So I am a full-time trader, and trading is my main source of income, obviously, but it doesn't mean that I watch charts all day long. It's impossible to see charts all day long because I have things to do also, and I want to enjoy my life, you know, going somewhere outside, or I have to meet some people and enjoy my life. I want to spend some time with my family also. So I don't monitor chart all day, but on these intervals, maybe 2 or 3 hours intervals, I come back to chart, and if I can trail, I do. If not, then I simply fix profit in a day. And I found that this is the most time efficient way to monitor and also to trail the profits. Because in this case, what I mean by time efficient is that so first, when I took the trade here, it only took me like 5 minutes. Only took me 5 minutes to decide to take a sell. I look at the higher time frame and middle time frame and took the sell, look for 3 confirmations, and took the sell in 5-minute chart here. And after this, so I take 5 minutes to take the trade. And after that, I leave chart, and here I would only, so after I took the trade and until I set the break even, here I have to monitor the chart. So I will either monitor by PC or mobile until I set the break even line. But after I set the break even line, this timing, it only takes like 1 minute to trail, to start trading the profits. So 1 minute, 1 minute, 1 minute, I lower the stop losses and keep trading the profits. So the whole time, this originally took me 5 minutes, and in between, I have to monitor charts. So maybe this will be taking probably like 2 hours or so, between 0:10 to 3:10, so that was 3 hours. But I don't monitor chart for 3 hours straight. Obviously, I come back to chart maybe every 10 to 15 minutes. So let's say I come back to chart every 15 minutes, and that will be 4 times 3, so that will be 12 timings. So 12, when I monitor chart 12 timings, it only takes maybe 1 minute each as I monitor until set the break-even line. So here in between I took the trade in, also the break-even, that will be like 12 minutes, let's say. So 5 to 12 will be, 5 plus 12 will be 17 minutes. It took me to set the break-even. And then after that, I keep trading the profit, and every time I spend only 1 minute, that would be 17, 18, 19, 20, and 21. So in total, I would only spend 21 minutes to make profit of 72 pips. So this is what I mean by time efficient. So the whole time, if you spend, let's say, counting from here 0 a.m. UTC until 14 UTC, if you spend 14 hours, and take 72 pips versus you take only 21 minutes and earn 72 minutes, which one's better is obviously the latter. And that's why when I come back to chart every 2 or 3 hours, it only takes me a couple of minutes to screen and to lower or to manage the stop losses like this way. So this method I developed myself. This is my original way to trail the stop losses, and I found that this is the most time efficient way to trail. And let's say the market goes backwards at any point, the market retraces backwards and hit the stop loss, then simply I take it. Simply I take. So and I would never know how far the market keeps going down. But as long as the market keeps going down, I trail the profit because I follow the trending market, basically. And that is my mindset of trend follow. So at the time of entry, I confirm the trending market and I look for the trading edge to sell. And after that, also my mindset is to trend follow. I basically trend follow and spend only 1 or 2 minutes every time I come back to the chart, either mobile or PC, and lower the stop loss. This is not really difficult, right? This is very simple. You simply drag and drop the stop loss and takes only like 1 minute or 2 minutes to do this. So along the way, it just goes towards my direction and I simply follow that direction. And I know that it happens, every week in the Forex pairs, and that is my strategy. And simply when it retraces backwards, I take that profit, or I take the break even, or I take the small loss. If it goes backwards against my direction, right after my entry timing. But but this is the philosophy of the trend follow, and I hope you can practice this way also when you run the tester or when you practice on the real market, and spend less time, try to spend less time, but take the most profit out of the market. In this mindset, you can be very successful with less stress in overall trades. Hold on, let me take a breath. Okay, so anyways, that was my Euro USD analysis and some practical example of how I trail the profits in this particular situation. So now let me talk about the other pair, which is Pound USD. So okay, let's see. Eugene says, how many trades do you manage at one time? I only manage one trade until I set the break even. But after I set the break even, I'm open to look for other opportunities. So, but it only goes up to like 3 trades at the same time. Yeah, I don't usually trade many positions at the same time. Once I have the running profit on the positions, then simply I prefer to stay away from other markets and just, do something else. Okay, let's see. Let me check other comments here now. Mr. Hazimir says, do you trade stocks? I don't trade stocks. I'm only trading Forex. And sometimes gold, but gold is a bit ranging right now, so I don't trade gold. Right now, I'm only trading Forex. Marcus says, hi Kay, can you share your Bollinger Band and stochastic settings? Sure, my Bollinger Bands are basically 2 Bollinger Bands. One with a deviation 1, 20 SMA, and the other one with a deviation 2 and 20 SMA. That is my Bollinger Band. And for stochastics, I use percent K30, percent D10, and throwing 10. That is my stochastic setting. And I use these to look for the entry confirmation. John Hera says, I'm taking paper trades during this sideways market. I learned good by it. I always place support resistance lines. What else do you confirm for the 5-minute chart for an entry? So I use Bollinger Bands and stochastics and Fibonacci levels. Also I use to capture the trading edge, and also I also use support resistance line and trend line and kind of trend line, and also candlestick patterns. I use doji break and engulfing breaks. So basically, I use many confirmations to look for the trading edge in the lower time frames. I combine these different indications to capture the trading edge. I used to use only, for example, stochastic cross, or I used to use only Bollinger Bands. But sometimes, as you may know, it gives you fake signals. So that's why I came up with the idea of combining at least 3 confirmations. Instead of only trusting one confirmation, I combine 3 or more confirmations so that it gives me the edge to trade. Let's see. Jai says, Mr. K, how much leverage do you trade with it? In terms of leverage, I use it only up to 20 leverage. 20 is my maximum leverage I do. But usually I take 10 to 15 leverage. And I value the risk and reward ratio more than the leverage, and also the risk per trade than leverage. I only take 2% for the risk per trade, and that gives me usually 10 to 15 leverage or less. Yeah, thanks for joining everyone, and good to see you. Good to see you. All right, so let me share with you my view about the pound USD. The pound USD in the daily time frame, now it's within the Kumo. So in the daily time frame, it shows range. So that means it may go up and it may go down, and we can't tell which way it's going as per daily time frame. And also, but if you look at the forward chart, this is going down. Here is a forward chart, and in the forward chart, it is bearish. So Kumo is pointing down. After the Kumo twist in the forward chart, it has been going down, and Kijun Sen is currently going down also, and Chikou span below candles. So this one is a nice market to look for the sell chance. But just to make sure that if there's any support level nearby, so let me place the horizontal line here, which is on the 1.3357. If there's a previous support level nearby, then it may retrace, so we have to be careful. So let me squeeze the chart, and there is no previous support levels. There were previous resistances, but these resistances were actually gone. I mean, the stop loss above these 2 previous resistances were already gone by this breakout. So in this case, we can just disregard these resistances. So simply, the next support level is going to be down here on the 1.3174, so that gives us lots of room to trade. If the market continues to go down, potentially it goes down like 178 pips, so it's enough room to trade. Excuse me. Sorry, I have to cough sometimes. So that I can just keep talking. All right, so that's pound USD. And in terms of time cycles, which I wanted to mention also, in time cycles, let me switch back to the daily time frame, because time cycles works in the daily time frame. So this is the time cycle I captured on pound USD. So interesting thing is on the lows. On the swing lows, counting from the 29th of September last year, it has been a 33 bar. 33 is one of the Kihon Suchi. So in between the lows until the 12th of November, it was 33 bars. And then counting from here to the next swing low, it was 27. And 27 was also the Kihon Suchi number. And that was Just to make sure, that was on the 20th of December last year. So counting from this date, the next potential swing low can be one of the Kihon Suchi numbers, and that will be on the 33 bars to the future, which is going to be on the 2nd of February. So on this pair pound USD, the next potential Henkabi is going to be on the 2nd of February. So I expect the next 1, 2, 3, 4 days, the market keeps going down. So with that in mind, if I switch back to the forward chart, that will be like this. So this is the 2nd of February or 1st of February, and around this date will be the next potential Henkabi for the lows. So I expect market continuously go down around this date. So this is time cycles as of now. So that means we can continuously look for the sell chance in this market. But obviously, once again, this is not 100%. Right? It may be traced backwards anytime because nothing is 100%. So we have to take the risk management as always in mind to trade. But potentially, it goes down until the 1st or 2nd of February in these time cycles. So that means if you're still holding the pound USD, you don't have to exit yet because Kumo down, Kijun Sen down, the next Henkabi is around the 1st or 2nd February, so there's no reason to exit yet. The time cycle actually gives you a very effective way to see how far the market can go down. I mean, until which date, in which future date the market potentially keeps going down or up. So that is also time efficient to think about that. Yeah, let's see. Mary says, do you trade indices? No, I don't. Marcus, you're welcome about the comment. Thank you for the comment. And Holist, thank you for joining from Brooklyn, New York. Good to see you. I've been to New York twice before, and I enjoyed the city so much. Thank you for joining and comment. Sam says, Kei-san, do you take trades on 5-minute chart if there is a near resistance area in the bigger time frame? It depends on the situation. If Kumo is looking good and Kijun Sen is up, Chikou span above candles in higher time frames, then I don't mind taking the trade to buy before the breakout. But if Kumo is too thin, then I would prefer to hold. So Kumo is very important. Kumo shape is very, very important to see if the market will break the resistance support or not in higher time frame. All right. So Euro USD, as I mentioned before, it's downtrending. So you can keep holding, but it's just that the forward chart, now it's flat Kumo, flat Kijun Sen, so it may retrace. So if you haven't traded yet, you better hold. But if you're already holding the sell, then you can just set the break even, or you can trail the profits, and you can just leave chart because it's bearish still. Okay, so now I guess I will end the live. So yeah, and switch to the Ichimoku membership live. There will be Ichimoku membership live in about 10 minutes, and I will cover the questions under question channel in Discord in Ichimoku membership. So for those who are Ichimoku members, I will see you soon. And for those who are joining public, I will see you tomorrow. So tomorrow could be a video or live stream. I might be out tomorrow, so that might be a video session. But I'm thinking to talk about some other interesting topic tomorrow. So I hope I will learn. You can learn tomorrow also and continue to enjoy this YouTube show. So once again, thank you for joining today. If you liked it, please press the like button before you leave. And please subscribe and click the bell button so that you get notified as I do the next live video session. So yeah, let's continue this journey. Like I mentioned on the video yesterday, I won't quit this YouTube anymore. So I will keep sharing more deeper and more exciting and more interesting knowledge about Ichimoku and about my own trading style. So hopefully you stick to the teachings and hopefully you learn something new and become a great Ichimoku trader and also a non-losing trader is my hope for everyone. So I will see you on the next one. So please everybody stay healthy and stay safe and stay gold. So bye for now everyone. Thank you so much. またね。